Hello, hello, and welcome to April 8th with Adobe at 67%. Let's go look at that chart. There it is, Adobe 67%, and we are closing in on that third ratio. We get to close in that third ratio. We should have a out somewhere in here. Let me see now. The low is 480.71, 480.50, and then 480.757. I'm looking at this line here called the low. So there is the lower low, higher low, lower low, higher low. Once we can cross above 504.24 at the close, then we'll move our stop here and then wait for our next lower low, higher low situation, or they'll be able to push through and explode to ROI 100, which you saw just a couple of days ago with IBT closing in at 101, and we got out at 87% ROI. So that's how the exit rule is applied. Okay, so that said that we're 67 there on Adobe, excuse me. And now we're going to go to KR. And here at KR, we're closing in on that third. We did close above the third ratio, and our stop is here, and you see we have climbed up. And then we'll see if we can get a dipper low here. That's what this is called, a dipper low. High low, higher low, lower low, higher low, dipper low. If we can get a dipper low in here to move up, stop up here, or again, we'll anticipate an ROI 100. Going on to Walgreen, and Walgreen here is a little pullback. We're closing in, and we got so close. We're within $3 of the high, and that would have been 2 days. But like again, trading is not perfect. It's not a straight line. So we come down and maybe might be a little bit of support right here off this dipper low right here, and then be able to push back up again. Stochastics and RSI are now in a small decline. But again, our stop is way down here until we get to that third ratio. So it's again, we're risking 1 unit to make 3. That's what 3-to-1 ratio is. Now, we have our newcomer, Capri, got in yesterday, which is really cool because Capri owes a pretty penny, 43.31. The story behind Capri was this. When I was in one of the trading schools, Capri was owned by Capri did not own, it was Michael Kors. Michael Kors was an up-end designer school store, luxury, high-end luxury store. Story was it was a hot stock, and we all jumped into it, and then some of us got bit, which is me, which is why you see it owes 43.31. Michael Kors eventually was bought by Capri, and the Michael Kors stocks were taken off the exchange and absorbed into Capri. So Capri now acquired the debt owed by Michael Kors. And that's what we're working on here on going in that 43.31. So that's where we're at, and our stop is right here off the ratio. Our third ratio is here at 57.95. Let me zoom in a little bit closer on that so we can have a little bit more clarity. And there we are. That's our position on Capri, and it got 15% right out of the gate. So it's a nice move, and histogram is increasing to the positive side. RSI is in the up direction, and so is Stochastics. And look, Stochastics is sitting at 40 value. When you see the side bubbles there with the blue, it refers to this line I color-coded blue, and it's in blue, and that's with 40. That's really a nice sweet spot, along with RSI 55. That means it has a lot of running room. So that's why it's important about getting into getting lower, good low stochastics and RSI and a rising MACD with a nice low drop of price to get into a nice advantageous position for a call. And the same can be said on the opposite side for puts. And we do have a put scanner, and apparently any puts are not showing up on our screen at this time. So that takes us down to the last and final the last and final positive AT&T, and that would be the letter T. And T-Mobile had a major drop, major. You can see that was a major drop today. And yet we're still able to hold on to some kind of profit. Not much, but some, at least some. And there's our 3-to-1 ratio over there. Let me zoom out just a tiny bit there. Okay. And there we are. So that's what they come down. Our stop is still down here, down at 27.85. Why? Because we haven't closed that third ratio. We got up there. We got the 31.15 on the high, but it didn't close above 31.44. That's an important key point of the 3-to-1 ratio. We're risking 1 unit to make 3, and it's excuse me. And it's extremely important because why? We want to lock in some profit to go for that exit, or we just lose $1. You know, we're risking $1 to make $3. And that concept is not new. 3-to-1 ratio is not new. I did a deep study many years ago on the 3-to-1 ratio, and it paid off. And it paid off in the 2 ways. And the 2 ways are target trading, where we hit 31.44 and take the money immediately off the table. There's two major school of thoughts in the 3-to-1 ratio. One is price is touch, take it off the table, or price crosses, closes above, and then we use lower low, lower high rules, unless we, of course, we cross into the ROI 100, as we saw with IBT. IBT never crossed this third ratio and still yet got to 101% close ROI to get last bar low. So that is there. Now let's go see where we stand with the market. So bring up our calculator. You can see that we are at 60.60 today, and our start was 55.33 back on January 1st. For 527 today, divide that by the 553 as a percentage, and we come up with 9.5%. We are 9.5%, and the S&P today is at 8.8. So we essentially call it 8.9. There we are. 8.9 is the S&P. So we are still slightly ahead of the SPY. And with that, we'll go ahead and conclude today's report for losers become winners, battling the market. Alpha's Adobe at 67%. Alpha's Stochastic Strategy at 9.5, edging out the SPY at 8.9. And with that, we'll catch you tomorrow. Thank you very much. Bye-bye.